Okay, go ahead. We're recording.
Oh, so I'm about 3/4 of the way through the psychology, um, the trading psychology book. Um, it's just been the last week or so has been crazy with new public health orders and things coming out. We've been slammed trying to get work settled and sorted.
Sure,
So it's been a bit slow the last week or so.
sure.
Um, but yeah, I've been looking at trades in the evenings. It looked a bit slow last night, so I didn't really do much. And
It's it's
we
been
were
a lot of consolidation, man.
yeah.
Um, I don't think everyone, not really anyone's really knowing what to do right now. Got good
Well, I
news.
saw that
Got
XRP did its thing
yeah,
again last night.
yeah. You got good news mixed with bad news. You got the vaccine, and then you got the virus, and rise in numbers and deaths and things like that. And in cases and lockdowns, and then you got a virus, and then you got the vaccine or vaccination or wherever state it's at. But so things have been this week. Shoot, and I think last week too it was just really kind of slow. But it's a good time to go through the trainings. Have
Yeah,
you got a chance to go through the technical trainings and stuff as you're going through your psychology and things?
I have here and there. I haven't gone through all of them again. Um, I have gone through some of them.
Okay, I would definitely put that as to like coincide with
Okay.
your psychology, even if it's just a video a day, and to go through all the videos, the technical strategy as you're developing, the psychology and the perspectives that we need. It's not going to hurt to go through. There's a training course in the pro mentorship, and there's a training course in the premium. It
Yeah.
wouldn't hurt to go through both of those. Now we're going to be covering the same technical strategy, following the same order and everything when we cover stuff on our calls. But so it's really repetitive, but it's so that we get it faster.
Yeah.
You
Okay.
know,
I'm
more
making
times
notes
we
as we go along.
experience it and see it, and then we practice it. The key is, and it's in that order. So you're doing psychology, you're doing the technicals, and then we're getting on calls, and then you're applying what you're seeing on your own as practice to see how it's going, and then we'll get on these, and we're gonna troubleshoot. Um, as you have any issues, well, or we'll if you have any issues as you have questions and stuff like that, then we'll be sure and find point, and target those things. But I wanted to go through one time everything with you, um, from top to bottom. Look at the trading plan, look at the checklist, and then we'll follow that order, and then we'll get on some charts. There's not a whole lot looking too great today, but we'll get on some charts. If we have to use some old markups for examples, then we can use some older markups from the signals channel. But
Cool.
I'm sure we'll be able to find something even if we have to scroll back. But I'll go ahead and share my screen.
Okay.
Let me know if you got it.
Yeah, I can see it.
Okay, cool. So this is the pro mentorship. This of course, this is where we want everyone to start. No one wants to go through this stuff, but like 95% of traders fail, and this is why. This is one
Yeah.
of the main. This is the main reason why. Is because this stuff is aligned in our minds. So we want to make sure that our minds and emotions and everything are in check and in alignment, before we get into um, our technical stuff.
Yeah.
Let's go over to the premium group, and let's look for the checklist. It's going to be right here in the files, I think. This is basically just an abbreviated version of your trading plan.
Yeah.
So, and actually it needs to have a few adjustments, but first is checking the news events. Just beginning, we don't want to be trading during red folders or anything like that, but we do want to pay attention to the impact that they have on the markets before, during, and after trading. So not trade currencies with red folders or multiple orange folders. This is actually, as you get the technical stuff down, I'm going to be introducing more fundamentals along with the signals, so people can see how they coincide and how you can actually leverage red folders, major events, and things like that, world news and things. But that will come as the more that you see it, the more that you check on the news, which we're about to go through. And then once our mind's right, once we look at the news and check the weather, then we can start to go through and look at charts and see how everything is lining up. So we want everything to line up. We want everything to line up right. We don't want to get into trends and all this stuff until we have at least a little bit of bearings of what's going on in the world, especially in forex. It's not just forex, it's commodities, everything too. As to, because that stuff heavily affects these things. You really, this technical strategy, we had it up to like 95% at 1 month, I remember, before the virus hit and everything. But now that the virus hit, there's more. I'm not gonna say it doesn't work, because it still works just by itself. But right now, there's a greater chance that this technical stuff, these technical levels, a lot of this stuff will line up. But if you're trading during a major news event right now, concerning like jobless claims or stuff like that, that you could have your levels blown through. So we want to make sure we're not trading anything with red folders, multiple orange folders. So we want to look at the forex factory.
So what are the red folders and orange folders?
About to go through it right now. Yeah. So this is last week.
Okay.
Let's get caught up to speed. So this is going to give us information. I just want to go over something real quick. Let's look at so we can just kind of connect the dots here. Euro USD. It came down before, hit TP1, got close to TP2, but we just saw this. I'm still not sure what caused it, man, to be honest with you. It reached the low down here. It reached the low and just shot up.
That's a big increase in a short space of time.
Yeah, it really, really is. I think maybe just because it was just so low that people were buying it.
Yeah.
Could have something to do with the vaccine. Have yet to still find that out. But anyway, so I want to show you like when you have, I know we cover this in some of the calls, but it's important to understand the primary currency. When primary currency is stronger, it goes up.
Mm-hmm. So in the pairs, the first currency is the primary one, right?
Yes.
Okay.
And so the secondary here would be the US dollar. So when we saw this shot down, that's because we saw the dollar shoot up.
Yeah. Okay.
And when we saw the dollar, shoot down at the end of last week, we saw it shoot up right here.
Will it always work that relatively?
In pairs like this, it will Euro USD, because these are the biggest rivals in the forex, in all of forex.
Yeah.
This is the most major pair. This is the two most compared currencies. There's more people trading this than anything. So I guess you could say these two are more at competition.
Okay.
I guess you would say. but it's good to understand. So if we're over here and we're looking at, you know, the Euro red folders, even though we may be dodging them right now, but if you look at them and click on them, just click on the envelope, it'll tell you all about it.
Okay.
This was what was forecast. This was what was previous. So what we got was lower than forecast and lower than previous. So that's worse than, as if it was worse than previous, but higher than forecast. Do you see what I'm saying?
Yeah.
So just going through this stuff and just taking a look, you know, what's happening and seeing how it affects the currencies is huge. We hadn't really had any. We had manufacturing for USD, which was good. It was forecast previously. It was 5.3.4. It was forecast 5.2. So it was above both of those.
Above both, yeah.
So that's even better. It gives you a real fast indication showing you it's green, but you want to compare those. So this is kind of showing you, I think last week what sent the dollar down was the jobless claims. It was low. I think it was lower than previous and lower than forecast, and that's why we saw the dollar dive down. And again, this could have had something to do with when it rose up. We'd have to check the time on it. Don't get too tied up trying to understand all of this all at once, but you know, just check and make sure. Like last night, for instance, if you were to place a euro trade, then and you saw all these orange and red folders for euro and for Great Britain, then this might be like one of the last pairs that you want to jump in and have ride overnight, because you don't know what's going to happen.
Okay.
So it's just by taking a simple look. Not really much left today. It tells you right here why we should care about this stuff.
Interest rates.
GBP's been really strong. You just want to take a look at these yellow folders. If you see like 4 or 5 yellow folders in a row, then that could mean something. You know, be cautious. But mostly we're looking at red folders, multiple orange folders back to back. We want to try to avoid those for now.
Okay.
Later, as we get the technical strategy down and we get our zones and trends and identify our as we identify our rejections, our engulfings, our divergence, overbought, oversold, all that stuff, then we can take a look at this information and be ready at this time at 8:30 p.m. or a.m. and be waiting for the result to come out.
Okay.
And if it's good and you see, like, let's say we're on Euro USD and we saw both, and we saw all, let's say for instance, we just saw a bunch of bad news for Europe, or a bunch of bad results for Europe, and we came down here and we saw really good news for unemployment claims and for GDP, then that would give us some contrast. Then, you know, we could, and if we saw then in correlation like a double top somewhere in a zone on Euro USD, then that would all be pointing this down, because the US dollar would have strength and it would line up with price action showing that there, you know, there's a good chance that the USD would pull down the euro.
Yeah.
So that's kind of how that works.
Okay.
You know, but for now, it's good just every day make a habit just to come in here and look, make sure, okay, I'm looking at this trade. I don't want to place it during one of these folders. These are high impact. Thursday, nothing going on. We have a short week this week. I think actually stock market everything closes on Thursday. So I think tomorrow there may be a little bit of trading on Thursday and Friday and forex. I'm not sure, but I think the stock market everything's gonna be closed.
Yeah.
But so as we're in our training and we're going through our psychology, this is where we begin. And so we're getting our perspective right. We're going through our training. We're going through this, even though we don't really know what it means. It's hey, dodge this stuff right now. Take a little interest, find out what it is. You know, maybe it just takes a little bit of studying. You have to have take an interest in it.
Yeah.
But right now, as long as the technical strategy is still going to work right now, and it still does work right now, I would say up to between 75-85% of the time for me, without looking at any of this stuff. But I may not go. It may be down lower to 65 to 85 right now. But using good risk to reward ratio, you know, you can still come out ahead. But I want to emphasize some things, and when we're going through our checklist here in a second, it's the simplest things with the technicals that make all the difference. So we're going through our psychology, we're going through our technical training, we're checking the news, gaining some bearings, you know, as to when to trade, when not to trade, what to watch for, you know, before we place our trades. I'll start it. I don't want to overwhelm people by trying to tie in fundamentals in alignment with technicals and stuff right now, because that's a lot to take on. So we're primarily technical traders, but leading with fundamentals in mind, the virus in mind. I mean, right now the dollar has just been like it shot way down, you know, it shoots way back up, and it's been throwing everything off.
Yeah.
It hasn't really been any consistency. It's been way down, so any positive news can have an effect on it and then give it a jolt. But let's look at do you have this right here?
Yeah.
You do? Okay, good. I would either, you know, make like a badge or something and have it where you can pull it up on your screen while you're trading, or make a post-it note, a printout, a post-it note, just to make sure that you're checking this stuff in order.
I normally print it out and then just check it off.
Cool. So these things, and this is probably the simplest strategy there is, but it's the most effective that I've seen. Simplest things make the biggest difference. Trend lines, support, resistance, getting your engulfing candles, rejection at retest, and your divergence, price overbought, oversold, all this stuff is really important. The multiple positions isn't 100% necessary. You can use one position and just trail your stop the whole time, you know, if that's what you want to do.
Yeah.
Is there a way to, I know that on TradingView you can add alerts, you know, when it gets to a certain level. Is that available on MetaTrader? I tried to look and I didn't really see.
I don't think it's available on MetaTrader, but I tell you what, I use it all the time on TradingView, and they keep on constantly trying to get me to upgrade to the next package.
Yeah. I'm just thinking, I mean, especially if you have, where you say you do multiple trades and you trail your stop loss as it goes through your take profits. I mean, I'm not in front of my laptop the whole time to keep an eye on it to look for alerts from TradingView. And that's why.
Sure. Yeah. So having if you have I think it's just a $15 a month plan.
Yeah.
On TradingView, you can set your alerts. You can do you can do multiple screens. You can have it downloaded the app on your phone. And so as it goes through a take profit, you can right click on the take profit. Let's say, for instance, we entered up here, add an alert, create. You see that little red clock?
Uh-huh.
It's going to tell you when it hits that thing.
Okay.
So you'd be able to come down and adjust if it sets way down here, come down,
Yeah.
adjust the stop loss to either break even, you know.
Yeah.
I'm having trouble getting my thing to work a lot, but either, you know, trail it up here where you entered, or protect some profits on the rest of your positions and bring it down above the first take profit.
Okay.
Let me get rid of one of these. So with the technical, it didn't go anywhere. I just found out you could do this the other day.
Yeah.
Like yesterday, I found out you could have multiple screens on this. You can do it on your MT4 on your desktop. But let's take a look. And we will go through some of the stuff that you go through in the psychology is just having the right expectations, having the right perspective on the market. One really major thing is accepting your risks, knowing how much that you're about to risk, knowing your risk to reward, making sure everything else is in alignment, you know, that you got your technicals down, that you see there's nothing fundamentally, nothing major in the way as far as news and stuff like that that should affect, you know, what's going on, you know, and then, you know, we're on the right track there. So
Yep.
like right here, you see this drop in gold.
Yeah.
That was from when the dollar rising.
So if you time it right, you can trade it on both ends.
Yep.
Trade it on the dollar going up and on the rest going down.
Yep. Actually, last night I had gold up here on this screen, and I had the dollar index down here watching both of them. And you can see as the dollar index would go down, gold would go up.
Yeah.
So let's take a look through. These have been more react. They haven't been as much reactant. I don't think a lot of people are going to, because this is just my theory. A lot of people have invested in gold and stuff like that because of the virus. Now there might be a vaccine. It's kind of just, it's just stayed in this. Whereas before we saw major climbs.
Yeah.
And so we just kind of seen, and actually looks like it's forming a double top. So I'm kind of thinking personally, you know, vaccine news gets better. I would see, I could see people selling off in gold,
Yeah,
and silver. Also because it is at a high right now. It's breached down past. It's past that high now. So if it gets rejected, it continues to come down. Vaccine news continues to get better. I'm not saying that's exactly what's going to happen, but you know, it's just thinking about stuff like that. And you know, if you're thinking and looking and observing, and you're ready, then you know you can catch it fall to the next zone, which could be here, here, and here, or even shoot, it could drop all the way down here because this is really formed like a cup.
Yeah.
A handle would drop somewhere down to one of these zones. But let's find some charts that we can mark up. These gold and silver really aren't too. The NASDAQ. Um, you can see that sharp spike up in the dollar.
Yeah.
And let me know too, if you have any questions, if you had anything specific, man, and definitely let me know. And we'll be sure to cover that too. You're seeing a whole lot of consolidation. Actually, this is one of my parameters are gone on it now. We had some parameters on it. It just hit a take profit. But one thing, if I can't see enough of the picture, I'm going to zoom out to a higher time frame. The first thing I'm going to do, I'm scanning horizontal and I'm scanning vertical, or not vertical, but you know, sideways. I'm looking for highs and lows. Channels like this is a high, low, high, low, high, low, even though it's not at the top of the chart or bottom of the chart, but because it's in a range. And this is to me, this is the simplest. This is the simplest, if I grab the right one, this is the simplest type of trading that I've done. This is all that I would do for a while. You just want to kind of balance it out. Whenever you have a channel trade, so we got one touch, two, nearly two right here. Again, you just want to kind of balance it out. You want as many touches as possible. So
Yeah.
getting this one to touch, getting this one to touch, and the fact that this one's out a little bit, it don't matter. You got more touches. So it's more or less like a this is just balancing act, man. But so when you have, let's look at the 1 hour on this. So first we're establishing highs and lows by using trend lines or channels. If I can find out where that thing went. Here we go. Okay. So we got 1, 2. Usually we'll wait till 3. But you can see that it eventually did go down. It didn't reach all the way down. But one thing I wanted to point out on channel trades is that it's really easy to align once you have a trend. This representing a high, which is this area right here. This is saying that we're at a high because prices have been turned around in this area several times. It doesn't take much to find a high when you scan horizontally. And a high, once you have a trend line and you combine a zone, it doesn't have to be the strongest zone in the world. But as you can see, you drag this one over, and it's been rejected here several times. It's been support, support, support. As it came through, it was resistance, resistance, resistance. So now we have 2 of our main indicators lining up. We have a trend we know that has rejected the price several times, and now we see it's in a zone. So this is what makes it so easy trading channels, because you can find these channels everywhere, and you don't have to wait for. Plus, usually they're pretty fluid.
Yeah.
they're pretty consistent. So I want my trades to be consistent. Then I want price action to look somewhat consistent. And that's the one thing I like about channels. But let's keep on cruising. So basically what I want to show you on channel trades is once you find it, it'll just kind of look like a heartbeat or something, you know.
Yeah.
That's really easy to trade. You can find them and you don't have to wait for them to be at the actual top or bottom at the chart that you're looking at. So if you're not finding anything that's up here or down here and you see a nice channel forming, then you know they're definitely great to trade.
Yeah.
I think Euro GBP had a fairly nice channel for a while. It's just really easy to see that these goes up and goes down, goes up, goes down, goes up, goes down, goes up, goes down. So I'm looking for lines. I'm looking for lines, just connecting the dots. And I'm also looking for lows. I'm looking for highs. In this case, we'd already been through these channels and we traded this a number of times. We traded this several times. And it's evolved several times. And as it does, you just got to make your adjustments. I think when we were first looking at it, it may have been something like this. If it's not lining up with the channel, indicator, you're looking for more touches, so you just got to balance it out.
Yeah.
This one's sticking out a bit. This one's sticking out a bit, but see, we have connection here, 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 here. We have more touches. If there's a part sticking out, it's not as important because we had more times that it stopped along this path. So it's going to be around this area that we're going to look for a low. If we're looking for a low, let me get this RSI up here. The RSI is on the last of the indicator thing, on the last of the indicator list, because it's not as it does help to give you an idea when something's overbought or oversold, and divergence does help, but nothing is going to be as efficient as using trends and lining up. I would count this as a rejection, a retest on the inside, right? A rejection. This kind of looks like an Adam and Eve. So we got a sharp spike, could have been a stop hunt or market manipulation. We got retest back on the inside of the trend. What we look for next is some type of support to tie in, and we're just going down the list.
Yeah.
We're just going down the list here. So pull a zone out and see if we can identify So this works just fine. You can see price was stopped here. It was stopped here. It stopped here. It stopped here on the inside once. This one gave you a couple different entries. I really like these whenever they go outside of the trend and come back in and retest and give you an engulfing. Yeah. This is actually good engulfing right here. Let me see if I can shrink this down. So this will be this will be an entry. It's hard to tell the divergence on this because this was so steep. But this will be an entry right here. Next thing you want to do is identify other zones. So you look for, again, we're looking for lines across, yeah, to identify zones. We're looking for places that price has stopped coming down. And we're looking for places where price has stopped going up. So same thing.
It sometimes feels like those zones get stacked very tight.
Yeah, no, they can for sure. You know, and if you need to switch to a smaller time frame and it doesn't give you that much space between your zones, then use less. You can use less positions and higher leverage.
Okay.
You know, and we're about to get to that with the risk to reward and everything. Yeah. So, but we can see here, price was rejected right here, here, and here from the upside, right here, from the top, just blasted through there. But it's been respected several times and prices stopped coming up here. So first place for a take profit, I'm going to look somewhere around here. Rather than put it up here, yeah, above this stuff, because price can more easily be turned around. So all this stuff is a resistance. I definitely wouldn't want to go enter here and aim for the other side of the channel because we have a lot of obstructions. We have price stop here again. So we're just identifying trends, rejections, entries, where to put our stop loss, because this is going to tell us where to put our stop losses and take profits. So stop loss, and the most important part about this is practicing this stuff so that you can get the entry and everything else right, and so that you can get your take profits right, so that everything will fall into place. It might seem complicated, it might seem simple to you, I don't know, but it just takes practice, and it takes just your eyes adjusting just to see this stuff. So we put our stop loss down here. We put a second take profit. And these don't actually have to be take profits. These can be areas that you map out once you see price cross them. Let's see, we got a top over here, so I'm gonna probably bring it down a little bit. See that rejection?
Yeah.
And then I'll put maybe one more. just right above this. But so let's get something to mark our entry. So you can see these 3 red candles. It came back inside of the trend. And actually, if you were looking close enough, this is an entry because these green ones, it came back in, retested, was rejected, it hit, engulfing. You know, we got several different entries here. We got another engulfing right here. These 3 red ones engulf this green one. You know, so you can use 2, 3, or 4 candles in sequence to engulf a single previous. And then we have another here. Just for this example, let's just say that we entered here. So that'll be our entry, stop loss, outside of the zone. On the other side, we went on the other side of the this zone, and we went on the outside of the trend for protection because we know that the trend turns around price, and we know that the zones turn around price. So this just goes back to, you know, why identifying, and all we're looking for is swing highs, swing lows, highs and lows in sequence, numerous rejections to determine that. After that, oh, by the way, if you see I have my bar up here, this makes things so much simpler. All you gotta do to build this, you see where you can go to info line and you have a star. You go to trend line, you have a star. If you hit the star, it's gonna put it out here. This is like if you're a painter, if you're an artist, this is like your little board that you got that's full of color and paint and stuff. So you don't gotta keep going and reaching over here for things. So I'll go ahead and show you. I use this quite a bit, so I'll go ahead and put short position on there. You see how I added it? I'll put long position on there. That way I'm not going over here fumbling around. Where do I put? Where do I put this, or where do I put that? I can simply just go up here. You can move it around. This is like your little board of paint. This is like an art right here. So we're going long. So what you do, click the long position. So we want to check risk to reward. And if it's not right, we got to make it right. And if it's not anything, we want to make sure that we're getting into, you know, that we're not, number one, wishful thinking. You know, aiming up here. Like, oh, well, this is the high, so, you know, prices get come up here. When in actuality, I mean, that may be a high, but there's a high up here too. When we're channel trading, these are highs. Every one of these is a high and a low. So where'd that thing go? Here it is. All right, so we're at almost a 3-to-1, which is a good scenario. This one's maybe stretching it a little bit, but you never know. You control your stop, and it could come up here. It could get out of the zone or the channel, end up hitting it. But at this point, everything is lined up. Let's get one with some divergence on it.
I'm glad that you said that the RSI is in the beginning and the end, because I've been putting a lot of weight on that. I do trade lots of things, and it would look like a good opportunity, but then I look at the RSI and there's not really divergence or anything, and then I'd leave it because I thought that the RSI, you needed the
A lot of
RSI.
people, including myself, when I was introduced to this is the very first thing I would look at.
Yeah.
And if it was way up here, then I'll place a sell, no matter what. But it's last on the indicator list because it's least important.
Okay. Yeah, see, I had it the other way around, so it's good that you say that.
Not saying that it's not important, because it to add to confluence of all this stuff. When you get a match and this is an alignment, and you have let's look at and you have bullish or bearish divergence. See if I can find a good example. Then it's like a deal sealer, not like all the way, but I mean,
Yeah.
kind of. If I saw this here, we have a trend, an obvious trend.
Mm-hmm.
Straight line. As far as like how far I go back, man, honestly, sometimes I'll go out to the 4 hour, but if I'm seeing this, I'm seeing low, low. I'm seeing rejection, rejection. I'm seeing it again right here. I'm seeing a trend. So my two main indicators, two of my three main indicators, the other is going to be price action.
Yeah.
So this is, and I get in on these like this, even when they're crooked like this, knowing this is probably going to turn into a head and shoulders. But look at how oversold it is. And look at the divergence on it. So just because it's last doesn't mean that it's not important, because when you have this stuff in confluence and you get you a solid engulfing on a retest here or right here,
Yeah.
then that's some strong confirmation there.
Yeah.
We have quite a bit of clearance before our first resistance. You see how this double top came down, nose came down, stopped. This one stopped at the trend. And actually, this one right here had divergence on it too. And it shot up. If you look right here. And you know what I do a lot of times? I won't drag this. I won't drag this all the way over, but I'll look at my crosshairs and follow that red dotted line over here. And I'll see. And if it helps me,
Extend it.
Extend it. Rejection, rejection, broke through, rejection, rejection, broke through, rejection. You put that together with the divergence, the trend, we have rejection right here, engulfing. These two are engulfing. It's kind of hard to see, but we got second engulfing right here on retest. We got a third rejection right here on retest. So, you know, again, entry. You can see a bit of obvious top right here.
Yeah.
Comes all the way from here. So that give you a good idea where to take your you know, where to take your profits and stuff.
Mm-hmm.
You know, I wouldn't consider taking them anywhere on the outside of this. But in this case, shoot, for risk to reward, I'll probably host the stop loss maybe a little bit tighter. You gotta be careful doing that though, because sometimes when you're playing it safer, you're actually taking a bigger risk.
Yeah.
But if we got in there, these ones that come down from double tops, these areas are heavier. So it's an abrupt stop and turn around. Abrupt stop and turn around. And you don't always have to have a ton of these things, man. If you want to run 3 positions, you do it just like that. Sure, entry. We already know this has been a nice, pretty much fluid motion between the euro and Great Britain pound. 2.5 to 1.
Good.
That's just something I just happened to notice. I mean, a lot of the times you see something at a trend, a zone, you see double rejection, you see a rejection, you see it engulfing, and you can spot the divergence to go along. Then just identify the top, either the top of your channel. In this case, we didn't use a channel, we just used a trend and a zone. So that's another way. You can do it just from zone to zone.
Yeah.
You know, if you have a sideways moving channel. And you can do it without having a trend. You put a price action pattern or a rejection in a retest at an overbought state or oversold with engulfing on the retest, and like I said, let's say bullish engulfing, and you have bullish divergence, a strong bullish divergence in an overbought area to go with that. Just identify your low and you know, put some take profits in between some areas where you would trail your stop or whatever.
Yeah.
So that's another way, but this is all following. There's several ways to do it, but you're using the same, you're using the same indicators, using trends, zones. So back down here to this example. You're using the same simple stuff, so it's just by practicing identifying the lines, scanning, like you're just connecting the dots, scanning sideways, horizontally to see, you know, what's going on. Let's clear the space up a little bit. So down here on this one, we determined we had rejection near the zone. The trend, you can see it came down here, this wick. is a sign of rejection. That means price did come down here and was turned away. That's a good sign. So we got complete rejection. I would say here. And we're seeing our divergence develop. And the difference in angle does matter on these. I like to go to the candle body.
Okay.
And not use the wicks.
The wicks. Okay.
But you can tell the greater the disagreement, the stronger the indicator. You know, just as more apparent the line or trend, you know, and the more times that you see it respected, you know, you see it respected 3, 4 times on the dot, and then there's no question. There's not as much question in your mind. Same thing with divergence. You see it way down here, and you see it at a nice trend, a nice support, and strong divergence. And you see a solid engulfing. So this would be your entry here. Say you got in here. Which a whole lot of volume I really don't care for too much coming up off the engulfing, because it takes away from some of your risk to reward works. Now you're looking at putting your take profit clear down, or your stop loss clear down here. But let's look and see. So that would be your entry. We're looking at putting stop loss clear down here, and that's a big space.
Yeah.
So not knowing if it's going to come down and create another bottom. This is just why I always practice, get it in a little bit at a time. You know, because if, let's say I'm using standard lots and I get in at a standard lot right here, and I'm hugging my stop loss, and I set it and I just take off for the day or whatever, and this thing goes down, or I just happen to get busy and miss it, then it just took a full lot and it just traveled.
Now that's a huge.
Yeah, you just lost like almost $300 or something.
Yeah.
So, but instead, if I waited and did a half, maybe if I did a 0.5, it went, then I lost half the money if it did come down to make another bottom down here to hit my thing. I wasn't paying attention or something like that. Anything could happen, you know.
Yeah.
In any case, I lost half of what I would have. Whereas if I wait for it to come back up, I see another engulfing and I enter another. I enter another portion, say over here. Then it's different. That's just one of the reasons why I practice it. Just not fully committed unless the conviction is really strong, you know, then of course I will. But because this isn't looking like a double bottom, this is looking like it's either, to me, going to form another bottom over here, or it's going to form a head and shoulders. In this case, it formed a head and shoulders. Whoops. So
Okay.
this is an entry right here. Number one, it's engulfing, plus it's crossed the neckline of the head and shoulders. It's complete. You're even more safe if you wait for this rejection.
Okay.
But anyways, I don't want to get too far ahead and make things too complicated. Let's look at our zones. So we'll reestablish zones. Move this guy out of the way. So we have an obvious area here. Here. Let's move these out of the way. Okay, so we have an obvious stop, stop, stop. You know, big stop here. That's the previous one that we were just looking at. We can see that we're clearly oversold, and you put that along with your price action with what we've seen in actual price in the past, confirming that it's more solid.
Yeah.
Divergence. There are strategies that just go off the RSI and divergence. Just because it's last on the list doesn't mean that it doesn't hold weight, but there's nothing as far as technical analysis goes that's going to, once you learn to identify the zones and trends in the candles and stuff, there's nothing that's going to be a better indicator for you than what's actually happening, not what some
projected to happen.
Yeah, what some device or some, mechanical, whatever you want to call it, you know what I'm saying? So your eyes are your best asset. Watching these candlesticks and understanding the zone, seeing the trend, spotting the retest, the engulfing, the price action pattern, head and shoulders, another entry. It's by getting this stuff down that makes this, it's the most solid. I don't care what anybody says. There's plenty of technical traders out there, and that's their way. They like to use technical indicators. That's fine. But there's not going to be any indicator that's better than your own eyes once they're developed. With that being said, everyone has their own style too. There's nothing wrong with using indicators. I have some friends that, love them to death, but for me personally, this is not lying to me.
Yeah.
I understand this. I can read it like it's nothing. Like it's plain. It's like plain English. It's like plain English to me. There's no misunderstanding. Like I can see this stuff. And to me, the technical indicators having a bunch of dots and lines and skittle looking stuff and clouds and things all over your stuff, you can't even see what's really happening. You're relying on, so I guess you could say I'm a little bit biased, not like prejudiced or anything against, or what would you call it?
If you found something that works for you, why change it?
Right. Once I spent enough time just practicing and I began to see this and I started to understand just by watching. Now I wasn't winning by any means, but I was learning, I didn't have someone show me all this stuff. I had to figure this stuff out. Or I believe it was given to me, but it just only makes sense. I want to consider taking some profits before I get to this because this is an obstruction here. Price has been rejected several times here. So if I'm gonna look at taking some profits, and this is pretty good clearance considering this GBP pair. That's pretty good clearance. This candle set way clear up here into this, past this, and into the zone.
So if you did one position at a time, you wait for it to breach the next zone again before you enter again, or?
Yes. So if this might get a little bit, balance it out a little bit. So if now this is what I do, and everyone's got their own style. Geez, I'll probably put one up here. First, I see something else going on. See a trend. That's going to help me mark my top.
Yeah.
These three. don't know if it'll connect with this. Could have done something like that, just to kind of help gauge the top, or you could just use these tops, or I'd shoot for probably something under here. But to keep it simple, let's say we're looking at three different areas to take profits. Now, let's zoom out. Or not even maybe taking profits. If you're just running one position. Again, this is like the rest of the stuff. It's just like a balancing act. We'll make it so this one doesn't really actually hit this one. So if you're running one position, there's nothing wrong with that. I'm sure a lot of people do it, but using multiple positions, like I was saying, like instead of entering full and committing full right here and it going down and hitting your stop loss, you can be more progressive and spread your leverage.
Yeah.
As it progresses. But in any case, let's just, for simplicity, let's say we entered our single position, whether we split the position or two or in threes or not. You don't actually have to put these if you have the time and you're at your desktop, and especially if you're using like MT4 on your desktop, it's as simple as grabbing. I don't know if you've done this. Use MT4 on your desktop. You can literally just grab your stop loss and you move it just like this. So let's say our entry, this white line's price, and it's come clear up here, and it stopped above. It stopped above our take profit. It set above there. I'm at least, at minimum, gonna move this thing to break even. If I'm running multiple positions, I might leave one at break even, and I might trail the next one up here at the bottom of this large engulfing candle, still giving it some room to breathe. And then as it breaches the next one, maybe take some more profits. If you're still running a single position, you still got all of this. You still got all this profit secured.
Yeah.
It's breached way up here, so giving it still room to breathe. So we put it right here. After this big volume candle, I'll tend to put it a little bit below that take profit here. Then I start seeing it do this stuff, and then I start to see this. Then I'm looking for my zone, and I'm looking at the possibility of selling. Because if I'm looking at a double top, and I get an engulfing on a double top, I'm trailing my stop right here. I get engulfing. Shoot, it's barely engulfing, but it's not looking good because I got divergence. We're in an oversold area. We're in zone. I'll probably go ahead and I would trail it like really tight. So even though it didn't hit my last expected target, I got what I was looking for. I definitely didn't lose out anything.
Yeah.
And a lot of times that's the way that it will play out too.
Well,
but with that being said, as you're watching this stuff and you see it line up, and let's say it came up to the trend and formed a double top, then why not look for another zone, or look on the RSI for divergence and look for a bearish engulfing on the retest up here somewhere, or at a zone at the overbought, and why not try to sell it on the way down? In this case, it really didn't go down too far. It jibber jabbered around for a while.
Yeah.
But I'm just always keeping that in mind too. if I'm getting out of a trade because it looks like it's about to turn around, well, if I think it's going to turn around, why not try to get in that sucker? If I can get it to a line up, you know what I mean?
Yeah, yeah.
So that's, let's see, let's check our risk to reward that we're looking at down here. We got it down here. Our stop loss is down here. This stuff isn't going to be perfect all the time, but you don't want to get into scenarios. In this case, we were looking to get up here, which, geez, man, that's, let's see, I got that right. We're looking at getting in right here. That was 3.5 to 1. Ended up being, we trailed what and got out up here. So we saw the double tops. It's still almost 3 to 1. So you're not always going to hit all the targets, obviously. You know, sometimes it's going to turn around right before take profit. You see this happening before any take profit, and you line up confluence as you're in a trade. And you line up confluence and it's telling you it's about to turn around and go the other direction. That's why it's so important to trail the stop as you're going up.
I was just about to say that's why you keep trailing your stop.
Right. Or entering multiple positions and moving your stop loss at least to break even. So at least you walked away with something. At least you walked away with some profits. You're in a risk-free trade. It took some more profits for you here. You know, you missed out on a little here. It brought you down, but you know, you didn't lose anything. It's better to do that than set it, forget it, and just hope and pray that, you know, it works. which comes down to, you know, having that alert system and everything set up. It's really easy to set up. If you need help with it at all, just let me know, because I mean, if you're only running 1 or 2 trades or whatever, a position or 2 a piece, it's no big deal. You hear your phone beep, beep, beep. It reached this level. Wait for the candle to set, you know, move your stop loss to break even, or, you know, trail it tighter if you're running one position, just to make sure that you walk away with something. Now, you know, it's better to walk away with anything than nothing.
Yeah, no, I'll definitely get the TradingView app on my phone, and do alerts and things on there.
Yeah, like I said, it's only $15 a month.
Yeah.
For, I think the package I pay is only 15.
Yeah, and that's not for what you get. That's not won't break the bank.
No. I mean, if you're serious, I mean, somewhat serious. I mean, with people who get serious at different times. Not everyone jumps in like balls out, you know, so to speak. You know, eventually, I didn't actually get to use TradingView until like a year or so ago.
Oh, really?
Yeah. So I mean, I used in fact, I had some of my best performances or outcomes come off of just using my tablet, my MT4.
Okay.
You know, but it's using the same stuff. Now, being sat down and having a nice setup, nice big screen, and, you know, learning how to use all this with alerts and everything. Does that help? Yeah, heck yeah, it helps. You know, it's nice. It's nice, you know, but you can do it with anything.
Yeah.
I did it
I'm
with
struggling with.
I
So
did
for
it with,
MetaTrader 4, you don't have an app for Apple laptops. They only have an app for iPhone and iPad.
oh, really?
Yeah, and I can't get the online version of it to work.
For your iPhone?
No, for my laptop, I've got a MacBook Pro.
Oh,
There,
really?
there's no app for MacBooks. It's only for iPhone and iPad. So I have to place my trades and stuff on MetaTrader on my phone and do everything on Trading View in terms of looking at the
So
market.
it won't let you download your MT4 from your broker onto your laptop?
No, I've tried it so many times. It seems like there's an online version that you can use, but I just can't, it doesn't want to log in, it doesn't want to work. So I'm stuck between two devices the whole time.
And that's not really so bad. I just now recently, as a matter of fact, again, I just recently started using the desktop MetaTrader 4. But you want to know why? Because I can put in a trade, with like a micro lot on here, and it tells me in dollars and in pips what I have to gain and lose. And I like that. And I can start off at a micro lot, just step in and then figure out what I'm looking at as far as money goes.
Yeah.
What I'm risking. And this goes down to accepting the risk and knowing the risk.
Yeah.
And I like to know it in dollars.
No, for sure.
You know what I'm saying? So it's easier for me to figure it out if I punch it in on my MT4. Surely there's got to be a way before you get on there. Have you contacted Hugo's Way and asked them about that? Or do you use Hugo's Way?
I do. Yeah.
I would ask them, man. They're usually really helpful.
Okay.
They're really nice. They're really fast to respond. They have a little message box in the when you get on there. I would holler at them and be like, hey, y'all have a solution for this. Surely there's a solution. If there's a trade that I'm considering, I'll enter it on this. If I'm here at the house, I'll enter it on this. And that way I can see here my risk to reward, but I can see, okay, I think in money.
Yeah. No, absolutely.
And so I can see, I can balance better.
Yeah.
Enter a micro lot just to see the ratio or whatever. And then then I put in the real stuff.
Cool.
But that's so from beginning, just looking at the news, making sure there wasn't anything really like crazy going on these days as we're doing this. We did just some channels, combination of lines, zones is all that it is.
Yep.
Just identifying highs, lows, is all that it comes down to. But the most important things is learning to draw these correctly. A lot of people will do this. See?
Yeah.
To connect this. That's not something happened here. This could have been a news event. It could have been market manipulation. The more you're looking for most touches. You don't want to go through a whole bunch of these. I don't know if you got the time, but I'll try to find one. Sometimes you'll find them, and a lot of times with this thing right here, where is it? You'll see with this channel.
Yeah.
With this channel deal that has this line in the middle. Every channel has an inner trend.
Okay.
So when you're channel trading, just always kind of remember that. See if I try to kind of find an example real quick. not the best example, but you can see this head and shoulders, that trend go through that head and shoulders.
Okay.
But I'm just making sure that you have the checklist.
Yep.
The checklist with you. You're going through the checklist, identifying highs, lows, rejections, retests, engulfing, overbought, oversold. Before all that stuff, though, get it into the psychology, continuing and reading as we're practicing and going through and marking up charts and placing trades, getting our indicators, tuning in this skill right here to tune in the most important skill to make sure that we're not going to I tell everyone this and I tell everyone things repeatedly, but I do it because it's trying to emphasize the importance of it. It's my own personal experience, and I still struggle with this stuff. It's a growth process, but you can be a professional at getting this stuff down. I can tell you when this thing is most likely to turn around, where it's most likely to stop, what everything about it. And I could get afraid or have the wrong perspective or anything could happen, and I would doubt myself or have the wrong expectations or the wrong perspective, and I'll hop out of my own trade. And I've done it several more times than I can count, and the thing follows through.
But I mean, it could go the other way as well and can go very wrong.
It could, and you do want to be safe to an extent, but you want, it comes down to fully accepting the risk.
Yeah.
And then also being wise and trailing your stop and stuff.
Yeah.
But because if I fully accept the fact that I got $100 on the line or $200 on the line to gain, 3, 4, or 5, then I gotta figure that out first, and I have to accept that, like really, really, really accept it. I'll know if I really accept it. If I lose it, I get upset.
Yeah.
But if I stop and I look and I think, I'm like, okay, I know what I got on the line here. This is within my boundaries. Everything is green, good to go. Mentally, I'm clear. I'm not like in any kind of funk or anything like that. I know what's happening. I'm not being sporadic or revenge trading or doing any of that stuff. Not depressed or anxious or in a rush or any of this. I've had the time to do all this stuff and do it correctly, to measure everything out, accept it on the inside. If it goes, it goes. It's a numbers game. And so it's focusing and getting all this stuff, getting your head right, getting your emotions right, your expectations right, getting your indicators right, accepting the risk, knowing it's about that this one trade isn't going to define the outcome of my trading career. It's only a small part, and I have to get the numbers and I have to run them through. If everything's in alignment, whether I have a good or bad feeling about it or not, I place the trade.
Yeah.
After you accept the risk.
Cool.
And then it's just doing that, repeatedly, and from using proper risk to reward, trailing stop loss, not over leveraging, keeping all those things in alignment, using your checklists, helps out big time, is how you over the long term will be consistent and profitable.
Yeah. Awesome.
But that's pretty much all I wanted to go over. Just wanted to go over everything, from like A to Z real quick, concerning the platform, the layout, the reasons why behind the fundamentals, the reason why behind the psychology, doing a little bit of, example as identifying, and of course this stuff is in training and we cover this stuff all the time. But, again, this is another time that we can go through it. Next time, if you can have a chart or two screenshot, or if they don't have to be screenshot, but if you can have some charts marked up on your end trading view, and just leave your markups, whether the trade went good or bad, and leave them for next time. You know, you can share your screen, and I can go on your screen, and I can make any corrections that I see from your screen, and that really helps bring to light from your side. So because you know what you were thinking, like get it in, and I can show you a difference, a different perspective, a different, it's a really helpful tool. So if you can have something like that ready for next time, just to mark up, the trade doesn't have to be a trade that won, just be better off if it was one that failed.
Yeah, cool. I have that ready. So I'm trying to think when, because Thursday is Thanksgiving.
Sure, take your time whenever you got the time. We don't got to decide right now. Just take your time whenever you figure it out. Let me know. I know the holidays and everything are coming up, but everyone goes at their own pace, not in a rush. Let me know whenever you're ready. We'll get it down on the calendar. We'll schedule it. Check up from time to time. In the meantime, as you're trading, as you have questions and stuff, just always reach out. Any questions, I got you. And we'll take it from there. Just because the session stopped doesn't mean you can't holler at me later today or later this week and shoot me a screenshot and be like, hey man, what you think about this? Always willing to take out time to, I'm usually just sitting right here, man. So, take a look and see what's going on, shooting back and forth stuff. We can solve problems all day throughout the week if we want to. So.
Okay. Awesome. I appreciate it.
Awesome. Well, I guess, did you have any questions or anything like that?
No, it was a really helpful session. It answered some questions that I had. So that's good.
Awesome. Well, we're looking forward to the next call. I'll go ahead and stop the recording, and then
we'll make some time for later.